Welcome to another week of Equity Mates. My name is Bryce, and as always, I'm here with my equity mate, Ren. How are you going?
I'm good, Bryce. Ready for another big week here. It's been a good weekend.
Yes.
Did you get up so much?
I, as you always say, play golf on a Friday, so I managed to get out onto the golf course.
Yeah, nice.
And look, we are looking for a new course. So if there's any recommendations out there for a new golf course, please do hit us up. But anyway.
Well, that's not what we're here to talk about today.
No.
We're starting the week with a few of the big news stories that caught our eye. Two, in fact. First one, can't go past it. Your favourite time of the year. My favourite time of the year. I think a lot of investors' favourite time of the year.
Yes.
Warren Buffett released his annual letter.
Absolutely. Warren Buffett releases an annual letter to shareholders every year, has been doing since 1965. And Ren, we haven't been around for that long, but there have been a few years where, well, actually, they're hotly weighted every year. But,
yeah, I think for most investors, when you start investing, there are two things that people say you should read. Security Analysis by Benjamin Graham.
Yes,
and then
don't read that,
and
though.
then all of Warren Buffett's letters.
Yes, yeah. And they are for good, and that is for good reason. Filled with, I guess, insights from his years of investing, and he really breaks down what has been going on over the previous 12 months at Berkshire Hathaway in a way that is designed for his investors to understand. You don't have to be a whiz-bang investor to understand what's going on, and they're always filled with insights and hotly weighted.
So let's put it in context, because the last couple of years haven't been great for Berkshire Hathaway.
No.
So 2019, Berkshire returned 11%. Compared to 31% for the S&P 500.
Yeah.
2020, Berkshire returned 2.5%, 2.4%, compared to 18.4% to the S&P 500.
You got crunched.
So 2 years of not great performance compared to the benchmark index.
Yeah.
So why don't you kick it off? How do you talk about the results?
Well, before jumping into that, if we're talking about returns, I've crunched some numbers here. What do you think was his best year for returns in terms of outperformance?
So I know early days when he had a small amount of capital, he crushed the market. So I'm going to say like early 70s, mid 70s.
Yeah, you are on the money, no pun intended. 1974 I've got here is the 1976. Need the glasses. 1976 was his biggest year of outperformance. The S&P returned 23.6%. Berkshire returned 129.3%. So outperformance of 105.7%.
Wow.
Very impressive, which is really obviously contributing to his overall performance of 20% year on.
Yeah, annualized annualized Berkshire has returned 20% since 1965. The S&P is what, around 11%?
Yeah.
Yeah.
One of his worst years, Ren, no surprises here, 1999. The S&P returned positive 21%. He returned a negative 19.9%.
Yeah.
We all know why that is the case, though. 1999 was the lead up to the tech crash of 2000.
Yeah, and that's probably a good segue to current day. Tech was running in 1999 and 2000, and Berkshire underperformed.
Yeah.
And, if you weren't investing in tech in the last couple of years, you were going to underperform.
Yeah, which is what we have seen for his last 2 years, underperformance versus the S&P 500. Yeah. But in terms of 2020, Ren, so currently Berkshire have a market cap of $483 billion, current share price of a cool $381,600.
Yeah. I think you shaved $100 billion off their market cap.
What did I say?
You said 483?
Sorry, $583 billion. And $42.5 billion was what their earnings were for 2020. And as you said, Ren, they got crunched in 2019. But if you look under the hood at what is driving the result, there are four jewels that Buffett talks about in his crown.
So you took a massive roundabout to not answer my question, and you've now just asked me. Yeah. So look, I'll answer it. The letter this year was really focused on Berkshire's four main businesses, as Buffett wrote about the jewels in the crown. Berkshire Insurance, the energy business, the utility business, their railroad business, and then finally Apple, which they own 5.4% of.
Yeah.
And so there were some good lines, and there was some interesting stuff in there. But really, it was a pretty introspective letter this year. I think not a lot of talk about investing or markets generally. Not a lot of talk about overall market conditions and what's happened with tech and stuff like that. A little bit on buybacks, but mainly focused on Berkshire. So where do we want to start? Of the four, Apple is probably the most interesting that it's included as one of the four.
Yep. So he, in terms of his four jewels in the crown, he sort of pegged this as equally weighted as his second or third most favourite jewel of the crown. As he said, Ren started buying Apple stock back in 2016 and bought into it over a 2-year period until the end of sort of mid-2018. I think they'd invested something like 36 billion, I think was their total investment over that period of time, which gave them 5.2% of the company. But subsequently, his main message here was around share buybacks and how the share buybacks that Apple were doing, despite Berkshire themselves selling out some of the Apple stocks for a profit of 11 billion, they now own 5.4% of the company as a result of some of the share buybacks from Apple. And so we all know that Warren loves a share buyback if it is below intrinsic value.
Yeah. Look, a couple of other key takeaways for me. So, their insurance business continues to go from strength to strength. Buffett's particularly proud that all of the other operating businesses around Berkshire allow them to invest their float, higher up the risk curve than some of the other insurers who are stuck buying bonds that aren't yielding nearly as much.
Yeah.
And so for Buffett, that is a continuing competitive advantage for their business. Energy, the utility business, I don't know if you've seen a lot of it, but Buffett has come under some criticism in recent years for not supporting the transition to renewables enough and fighting it in some instances. There was a line, a throwaway line perhaps, but a line nonetheless in his letter talking about how they are going to move towards greener and more sustainable forms of energy. So, I guess we'll remain to be seen. Yeah.
Yes.
And then on the railroads, for me, just a fascinating industry that I don't think a lot about. But Berkshire's railroad business has the most over 1 mile freight tonnage.
Yeah, biggest by volume in America.
Yeah. And it's it's an interesting business that I guess if you can own the right routes and get the right pricing, it's probably just an infrastructure play almost. It would be pretty consistent, I think.
And the other takeaway, Ren, is he had $11 billion write-down, which he admitted was an error from 2016 when he purchased Precision Cast Parts, and has subsequently wrote that down last year, and that's obviously reflected in the earnings that we're seeing from 2020.
Yeah. So not even the greatest investor in history, which I think he rightfully can be called that. Not even he gets it right every time. Wrote down the value to the tune of 11 billion. Yeah.
Tough.
Their results this year. But look, that's Buffett's letter. Everyone should read it, I think.
Widely available on Thought Starters, our email that goes out every Monday. And Ren, finally, a quote from him that sort of sums up Buffett to a T. He says that if strategy requires, and this is him talking about companies that he likes investing in, he says, if that strategy requires little or no effort on our part, so much the better. In contrast to the scoring system utilised in diving competitions, you are awarded no points in business endeavours for degree of difficulty.
Yeah, he's always good for a quote.
Yeah. So that brings us to the end of the Buffett letter. Ren, let's move on to another piece of news that we're sort of really following with a lot of interest.
Yeah. Well, look, this is right up my alley. And I started the year talking about DoorDash, and I think the food delivery ecosystem is really just starting to be built out, and it's one that I'm watching closely. And I want to start with a question.
Okay.
All right. What do Wiz Khalifa, Tiger, Mr. Beast, the YouTuber, Paulie D, Steve Aoki, and Travis Barker all have in common?
Celebrity status.
Celebrity status?
Tiger Woods? You said Tiger.
Yeah,
TYGA. Look, I would have to say, given I know what we're talking about, they all have a ghost kitchen.
Yeah, well, they all have ghost franchises.
Franchise.
For people unfamiliar, let's quickly explain what a ghost kitchen is. And basically, it's a restaurant that isn't available to customers, isn't available to customers to pick up or customers to dine in, I should say. And instead, you can only order on a delivery app, a Deliveroo, a Menulog, or Uber Eats. And so what this allows these restaurants to do is get, cheaper real estate in less desirable locations. Like you don't need a nice shop front, and you don't need an area for people to sit and stuff like that. And it also allows them to list multiple restaurants and then just cook it out of the same kitchen.
Yeah.
Gives the restaurants a lower cost structure, and it's all optimized for the delivery apps. So they're ghost kitchens. They've been growing. Travis Kalanick, the founder of Uber, after he was forced out, started a company doing something similar. But it seems that there's been a development in this landscape, a really interesting development, and a development that involves all those celebrities, and that's ghost franchises.
Yeah, it is fascinating to see what is happening, and look, I'm not surprised that we are getting to this sort of development, given as you've sort of rightly pointed out, lower overheads, probably higher margins, and the way that people are changing, eating takeaway and that sort of stuff, more so through these apps than I would assume going out. It's kind of shifting this way, but ghost kitchens are pretty fascinating.
Well, hold on, let's explain what ghost franchises are.
True.
So basically, think of your standard restaurant franchise, your McDonald's, your Starbucks, whatever. They open locations, they have a set menu, and they give instructions to all their franchisees to how to cook, what to cook, how to serve, all that stuff. These ghost franchises are similar. A lot of them have celebrity endorsers like here, but there are companies behind it that create a menu, create a way to present the food, all that stuff. But they don't even own any physical locations. They then sell that to existing restaurants and cafes and stuff like that, who then do the cooking and all of that and manage the orders on behalf of these ghost franchises. So to give you an idea of the scale of this, Mr. Beast, probably the biggest YouTuber in the world.
Yep.
He managed to open 300 restaurants in December alone last year.
That is crazy. That is crazy.
Starbucks were opening like a Starbucks a day in China?
Yeah.
Well, eat your heart out, Starbucks, because Mr.
He's
Beast
opening 10 a day. Yeah. So just to break this down though, so what's happening is, let's say Mr. Beast is going to the franchisor, who is the, I guess, owning all of these franchisee restaurants or licensing out the franchisees. They then take Mr. Beast's brand and say to these individual restaurants, hey, we're going to make Mr. Beast burgers. Here's the, recipe on how to do it. And then subsequently, that's how Mr. Beast can open 300 restaurants.
Yeah, that's it. So we've got some information here. Like if you order a Mr. Beast burger in Utah.
Yeah.
It's some restaurant, and I can't find its name, but some restaurant cooks it for you. If you order it in Manhattan, it was a bar, like a neighborhood bar, that will cook the burger and then organize the delivery. So no capital expenditure really for these businesses. They just partner with local restaurants and then take a commission every time.
I wonder who really has quality control here, because if you've got a cafe doing a burger there, you've got a fast food restaurant doing a burger there, you've got a pizza place trying to put their hand up to do a burger over there.
I think in the same way that any franchisor has to manage quality, they would manage it. They would secretly order sometimes, they would do surprise inspections, it's how you manage it.
So then from an investing point of view, Ren, what does this actually mean? So we've got obviously the apps that we can invest in, but you've also got the restaurants. So let's sort of start from, what does this mean from a restaurant point of view?
Well, I think the interesting thing is, let's start with the apps, because I think that's really where the investment story is. These apps started as great ways to connect people who want food with people who are willing to deliver it, and restaurants that are willing to cook it. But what we're starting to see now is a real ecosystem and get built around these apps, and they're becoming a real platform. And rather than existing businesses integrate what they're doing for these apps, there are businesses that are being built specifically for these apps. And I think that's a really interesting thing that has really started in the US, but is starting to emerge outside the US as well.
Dream state for these platform businesses when businesses start
Building
developing
specifically
for your
Yeah.
platform. Yeah, it's pretty phenomenal.
For the local restaurants, though, I don't think it looks good. I mean, they're already struggling with lack of foot traffic because of COVID, the delivery fees that Uber and stuff take, and now there's another middleman taking it more. So it's probably not good news for local restaurants trying to compete with some of these deeper pocketed franchises.
Yeah. Well, Ren, that brings us to the end of that segment. 2 news articles that have caught our attention this week. If you would like more information on those news articles and other articles that catch our attention, sign up to our Thought Starters email, which is on our website at equitymates.com. But Ren, tomorrow we are chatting crypto.
Yeah, can't wait. Same time, same place. See you there.